Okay, folks. Well, thanks for joining us. This is the Moe and Simon Show. I believe this is what, our fourth in the, yes, it's the fourth out of five. We got one more coming up on July 21st. My name is Moe Agostino, Chief Commodity Strategist with Farms.com Risk Management. We got Dr. Simon Atkins with Advanced Forecasting. We're going to be talking markets and weather today, get an update. Just a reminder that, again, if you want to join the webinar, the last webinar, July 21st, there's the link there. Oh, sorry. Let me share this with you. There's the link there on the screen. If you've already joined us, you know where that link is. And I want to thank our sponsors, both Case IH and Advanced Forecasting. And if you're a U.S. farmer, it's absolutely free. Just you can join our yield and price forecast contest. There's the link. And you got about a $3,900 package that you could win. There's 5 draws. So don't hesitate to go and register for that. Okay, so I'm going to just share my screen here this morning, Simon, before we get started on the markets. We got corn up 3 to 4. We got beans down 10. Canola slightly lower. We got wheat slightly higher. So it looks like, Simon, well, there's 2 counteracting forces going on. One is weather and one is that global recession fear. And yesterday we had that big inflation number, 9.1%. I wasn't surprised. I thought at some point we'd go to double digits, but I think because of the collapse in the commodity prices and lower crude oil prices, it's a lagging indicator. So I'm not sure we're going to get to double digits. And yesterday, the Bank of Canada surprised with a full point interest rate hike. They're taking the lead versus the US Fed. We'll see if the US Fed follows today and then again in July. But I think that global recession fear, because if you look at crude oil, is taking over the weather scare. But we'll get into that with you, Simon. So crude's down another 185, and then you can see here the Dow is down 434 points. But look at the Canadian dollar down a full point. So despite the higher interest rates, which is supportive, we're trying to fight inflation, but then you got the US dollar soaring almost to 109, 108.6. It's an amazing run in the US dollar. So Simon, it looks like the weather's turned hotter and drier. Why don't you get us going?
Yeah, I got to make a comment though on Canada. I don't usually do this, but I got to say it. I think Trudeau's pissing off all the farmers in Canada. he's following the Dutch guy. Who is it? The prime minister there.
Yes. Well, I'm not going to get into politics, but you know we have we have a dictator up here, right?
I was going to say, which is more dangerous for everybody to listen to, right? Or to talk about politics or weather. Exactly. All right, Mo, well, let's get into it because this is my expertise for 33 years. Commodities is yours for, what is it, 38 years?
42.
42, my gosh. All right, well, let's get into it, guys. I want to start off, let me get my little pen out here, because I want to start by talking about the amount of heat that is going to suddenly rush up the plains, okay? And it's not like, Mo, it's going to catch a lot of people off guard, but it's going to be the persistency. So, okay, 1, 2, 3, 4, 5 days. All right. But then it's going to get even worse, 6, 7, 8, 9, 10. And that takes us into about 25th, 26th of July. And then we've got a 3-day breather, and then we've got another one. All right. So this heat dome is going to continue until about August 5th. And we may say, all right, well, let's just get through the next few weeks and we'll be okay. Okay, I follow that logic. But what I'm seeing here, and by the way, Mo, I'm so excited to bring you this site soon. It's our 24-hour, 7-day. I mean, it's consistently updated. It's global. We got so much going into this site. It should be up soon, but it's called marketweatheredge.com. I'll announce this when we get it up. But this is one of the maps that shows the 65-degree temperature line at 6 a.m. this morning. All right, so all within these 2 sort of crushed pink areas, and it's just flowing up like all the way up here into the north central prairies. It's absolutely incredible. It's like a big suction tube or conveyor belt, and this has me a little bit worried. Now you notice this pink line goes literally like west of the upper Midwest, most of it. It comes to Minneapolis. So that means, okay, if we watch the sort of the signs of Mother Nature, just like we watch, there's a lot of farmers out there that very intelligently watch ants and birds and bees, Mo. And I'm a big subscriber to that, because if you look at this, Minneapolis means that it will get some heat. But on the other side of that, this area will not get most of the heat that's coming up the plains into the Western Corn Belt. All of Iowa will get some heat. Yeah, go ahead.
Simon, this morning I'm in Grand Forks, North Dakota, and it's a balmy 63 degrees.
Yeah. And you speak to people at the Grand Forks coffee shop, and they're like, wow, they know what's coming, Mo. Yeah. They know, but they don't know maybe how many days of it is coming. All right, well, let's get into the next map. This is the National Weather Service. And what I love about this map is it shows the big clue. This is the Boecker wave, right? The Doom of Dome, or the Dome of Doom. And you can clearly see this means, all these oranges mean that high temperatures are going to be between 100 and 105. That's more or less what the National Weather Service does. And what you're going to see next week is you're going to see this line kind of come down like this. All right. So it's going to like get probably to about here. All right. And no further east than that. We've been looking at that very carefully. So if we center in on Minnesota, Iowa, and Wisconsin today, all right, we take this zone. I'm going to draw a very careful line here on where I think the stress is going to be. All right. That area. East of that area, you're going to be fine. All right. There's not going to be much stress there. And that black line shows moderate stress, and the high stress will be here. So there's not much of a difference. That line, Mo, if it moves, like, the worst case scenario is it could move out to here. And that's about 150, 200 mile easterly progression. But it depends. I mean, if like, I'm blowing up my lips here like a balloon. If it really expands, it can go out like this. But the most likely is like this. All right. So you got this southwest area of Iowa that's probably going to do the worst. All right. So you've got Denison here, right? You've got Fort Dodge. Denison's probably going to be in it. Fort Dodge will be out. And then for Minnesota, the heat will actually expand like this. Okay, so it'll be kind of like a double whammy, kind of like this, right? How it goes down there. But Wisconsin should be fine. Now let's look at this. This is our drought monitor on the Market Weather Edge site. And obviously, if you go to the worst, right, the extreme, this happens about once in every 15 years. But obviously, for the last few years, we've had a lot of the reds coming out. And this is what worries me the most, because this is going to start to expand, and it will probably come up here. So we'll probably see lots of oranges in 2 weeks' time, Mo. Our prediction is all of this will be this color orange right here. Okay, let me just do that again. All right. So this is the area that's going to be hurting the most. Plus, these two areas are going to join. All right, so all of this is going to go into this orange color too. All of this is going to go orange, because Missouri is not going to get any rain for 2 weeks, and most of it, of the 2 weeks, most of Missouri, and it's just going to get incredibly hot. I want to show you that today. Let's look at something different that I haven't shown you yet. This is precip analysis. This is not percent of normal. This is an anomaly from normal in millimeters. Remember, 50 millimeters is 2 inches. So, right, 1 inch is 25 mils. But I want to go to something very important. The last 30 days, look at the amount. The browner it gets, right, the crappier it gets, we might say, but the drier it is. And we're seeing one major drought. Then we've got this second area developing. And then we've got this third area developing over southern Wisconsin into western Wisconsin. Southern Minnesota into western Wisconsin. What happens, Mo, is these link together and then they fuse like a chain. All right, so you've got one chain, two chains, three chains, and you'll see these linking together over the next couple of weeks. And that's going to be the big surprise to the market. So I think we're going to see, we're kind of probably at bottom right now, and then we're going to go up, right? And then I'm going to get to, I'll go as fast as I can today because I know we've only got minimal time, but we're probably going to see the rains come in the north central Corn Belt in the second week of August. And that's going to push down prices probably quite rapidly. The thing that I'm advancing out and on a big outlook is late August into September is going to get too cool and too rainy. And I don't know what that's going to do to the actual crop. You probably an expert in that. But let me go over the NOAA. This, I think, is really going to hit home probably come Monday when we come into the markets and everywhere is very much hotter. You've got much above. Literally, there are going to be 100-degree days in this pink shade, 90s in the red, and 80s in the orange. Okay, so 80s here, 90s, and 100 plus. All right, and somewhere in this is obviously 105. You're going to see corn burn in Nebraska. You're going to see corn burn in Nebraska. And this much below is where the most worry will be. Okay. But notice how it expands in the 8 to 14 day into southwest Iowa. And again, if it goes 150 miles, this much below this mega stress could go all the way out to Des Moines. All right, that's the worst case scenario with about a 1 in 3 probability. Let me take you to the ions. This is our sort of advanced analysis of what the energy in the atmosphere is doing. This is where we are right now. And you see this blue, Mo? That's negative ions. That's storms, cooler temperatures. I've always told you, probably, what, a week ago, I think, Illinois is going to do much better than most areas. And what an irony. It's actually going to do probably better than Indiana and Ohio. And that southeast slip of Iowa is probably going to get 1 to 2 inches of rain in the next 10 to 12 days. So it's going to be okay. But what I'm very worried about is this big, deep red here. And that, I think, is probably going to do more damage than the marketplace is expecting, because we've pretty much escaped right now most of any damage. Now, the only exception, again, is that southwest corner of Wisconsin, easternmost, like the eastern 1/6 of Iowa, and the northwest part of Illinois. That area will be okay. And here's the temperature deviation. So we are in this kind of 12 to 18 degrees above normal, right, in this area. But you see it, how it's advancing slowly eastward. This corresponds to this area. And the second week, you're going to get this darker red coming through here. All right. And that's the big worry about how much is the heat dome going to advance. Now is our key. This next 3 weeks is going to be the hottest and driest period of all summer. And there's going to be damage. I mean, next Friday, Mo, I'll bet you $100 we're going to see -3%, -5% on these key states in the Western Corn Belt on the percent good to excellent. All right, that's our bet. I don't know about $100, maybe 80 or maybe 60. No. We're confident on it, Mo, so maybe we'll make that bet. But here's the redness. You see this? Whenever you get these darker shades of red happening in Iowa, Nebraska, and South Dakota, these guys are going to be hurting in about 10 days from now. And I think the real key is what happens from the 29th of July through the 8th or 7th of August. That could be the critical phase that just slams on the stress after 2 bad weeks, and it could be the doozy to create some real negative yields. Here's why. Week 2 actually has less rain in key states going all the way up into southern Minnesota than it does in week 1. See this green area, and then we've got this nice band over southern Wisconsin. They're going to be fine, but it dries out all over the Midwest, except for that northwest area of Illinois. Let me go into a couple of other maps. This is an update of the stress through the 31st of July. Anywhere in this brown area here, you can see it's heavy stress for the next 2.5 weeks. Moderate stress up here, even though it's going to be drying out, Mo, it's not going to be as hot. So the stress load won't be as bad. Little stress, if any, okay, in this blue area, and low stress all in this white. So the Eastern Corn Belt is going to be a completely different animal to the West Central Corn Belt. And let me just review this and I'll be done in 2 minutes. Here's the hail derecho threat for the month of July. And obviously now we're going into the second half. There's all the drier sort of conditions here. We went over this in the previous report. And this is possibly the next risk, right? Okay, so it's bearish with the rain, but we've also got big possibilities of derechos and heavy hail, like big hail coming down the plains in, let's say, the 2nd and 3rd weeks of August, and even pushing into eastern and southeastern Iowa. So that could be the big surprise here as we get a sort of an eastern push of that hail derecho threat. All right, Squire, back to you.
Okay, can you stop sharing your screen for a second? I want to go back to the market.
Let me get that and stop share. There we go. All right, back to you.
Okay, so folks, I want to tie in can you see my screen, Simon?
Yes, now I can. Okay. Yep, confirming that.
All right, so what I want to do is tie in what Simon was saying about the weather threat for that Western Corn Belt, mostly between the 17th and August 5th. So you can see here, I'm just going to pick on December corn. You can see the chart here. Just give me 1 second. And you can see the top up here. So you got 1, 2, 3, 4 tops, okay? Basically, I'll just highlight it for you here. And then you can also draw the support. The new support pretty well comes in around $7, okay?
Okay.
The top end of this, so now we're starting to trade this new range down here, okay? So we've had a bottom, we've rallied to the top end, which is around that 661. The low end, I believe, is 557, something like that. And we tried to retest that low again, and now it's trying to rally again. What I'm trying to say to you is that you could create a double, sorry, it looks like a double bottom, but this time of the year, it's tough to create double bottoms. In fact, what you're going to create is a double top. So you got one top and then a second top. So if the market gets back up to this level because of the weather scare that Simon's talking about over the next 2 to 3 weeks, and sometimes the funds will overshoot it. So I'm hoping that maybe you get lucky and we get back to 7. So it's that 650 to 7. And if maybe you need to catch up, maybe you're worried, maybe you need to make some sales, some hedging opportunities, maybe you want to short futures or buy some put options, this is the area up here that you probably want to do over the next 2 to 3 weeks. I think there's going to be one last chance to do that hedge. But Simon, your moisture in August and that cool weather is going to be very bearish prices. So once
we agree on that.
Once we get past this dry forecast the next 2 to 3 weeks, I think after that we could break this low. And then you're talking about frost in September. Frost usually does not move markets much unless it really is early and does a lot of damage. I think it was one year, 1975, that happened.
Yeah.
I don't know if you remember 1975. Anyways,
77, wasn't it?
I can't remember the exact date, but there was one where we had frost that first week of September, and it did. I think the market rallied like $1 a bushel.
Woo.
So, but it doesn't look like you're saying the first week. It's more like the third week. So.
Yeah, and that's the upside risk too, that because the positive ions of drought and heat, Mo, are building strong now, the upside risk is that it could actually last a little bit longer.
Right.
We're going to be monitoring that for next week's call, and we'll go over that.
Right.
But I think this analysis that you've done is very, very interesting. One thing I'll add in, there's a lot of weird things going on in China. It looks like with a heat wave there, Mo, we've done some interesting analysis that COVID actually gets worse in high heat. And it looks like maybe COVID could go into more lockdowns, and that could be a cause of why China has year-over-year 25% decrease in imports.
Right.
So we've got to watch China.
So look, if we didn't have this global recession fear, if we had this weather threat a lot earlier, Simon, I think this market would be at new all-time highs. But because you have a delayed weather threat, and yes, it's going through pollination, but they keep throwing in moisture along the way. So the market, it's
the market's been confused.
It's very confused, like you said. So that recession fear is being countered by the weather threat, but I think it's that recession fear that outweighs the weather threat, unless it gets worse. So is it going to get hotter and drier? Or are they going to throw some moisture at us again?
No, they won't. I think the model now, even the GFS, it's adding less and less, even if it flip flops. In other words, it's going to probably continue to flip flop, but each time it does, it will take out moisture that it tries to add in. In other words, it will add in less.
So guys, you guys can wait till next week. Let's see how hot and dry it is. Let's see what Sunday night's weather forecast is. You might get lucky. You might get a bounce of 50 to 70 cents, maybe even a buck. And I think that's your last selling opportunity. Simon, it's been a pleasure. Thank you very much for your time. And we'll look forward to the next one. Take care.
Yeah. Okay, Mo. Have a good one, everybody. Cheers.